Now, in fact, go across to Anupam Guha, who's also joining us on the show today to discuss some of the trends as he sees them shaping up. On some of these PSU banks, then, Anupam, if we're just looking at them closely, give us a sense of where you see us. Do you see us as an inflection point currently? Do you feel perhaps we're going to start to see a shift in how some of these PSU names are valued? What are you expecting this time around, especially from earnings as well?
Hi, morning. So essentially, as the last time when we spoke, I think the trend continues to be towards quality for us. While on some of the PSU names, valuation looks compelling, but again, between quality and valuation, the move of money that we are seeing, especially amongst the HNI category, is largely still wavering towards quality at this point of time. While in the last 2-3 months, at least, we are seeing some bit of interest coming back in terms of trying to do some value hunting there.
Anupam, hi, morning. Aisha as well joining in. Is the lumpy HNI money now coming back to the market, or would you say it's still pretty much sitting on the sidelines?
Aisha, unfortunately, the money still continues to be on the sidelines. If you were to look at the overall allocation of our clients, debt continues to be favored. I think people are still skeptical in terms of how they see the macro numbers, especially there is lack of demand, so to say. And I think what we are seeing as a trend is, and which is what we are advising our investors as well, is to put money in shorter duration paper and look at quality. So that is on the debt side. I think on the overall allocation basis, I think asset allocation as a theme has come out in a big way. Given how the sentiments have been, I think what we are engaging with our investors is essentially to move away from sentiments and get into the disciplined way of investment. And there, rather than HNI trying to time the market, try and take their calls, we are essentially going back to the simplistic way of investing, which is to say that why don't you give your money to fund managers and let them really do the entire asset allocation for you. And if you were to look at the market today, I think there are a whole lot of asset allocation strategies that are available. A lot of fund houses have their own prop model of how they do asset allocation, be it on price to earning, price to book, or say a yield gap or interest rates, depending on the money moving from debt to equity. Even we are also seeing a lot of interest in multi-asset products with components of gold. So I think on an overall basis, we are seeing that as a big theme. The other trend that if you were to look at is essentially the LRS money, and I think briefly again we had spoke about it last time, which is I think close to $16 odd billion, which is huge. So the point that is that money is moving out and people are wanting to diversify as well. So diversification as a theme also I think has come out in a big way, and which is where I think you have a whole lot of funds that have come out with new strategies, including people like us who are advising our clients to give part allocation into funds which also invest into global companies, blue chip companies there, and a combination of playing the Indian market and some exposure to global asset class. So that broadly I think as a theme is a big theme that at least as a trend that we are seeing amongst the HNIs, Aisha.
But as the asset allocation, Anupam, is a large chunk still going towards equity, or would you say it's diversifying because gold has begun to outperform of late in the last 6 months? And of course, we all know that debt instruments always do find favor as well.
Right. So I think diversification as a theme has come out and people have realized, you see, even people who are wanting to do value buying, nobody wants to lose money, and the kind of market volatility that we've seen in the last 18 months, I think people are wary of going in one lumpy money that you spoke about. So I think systematic investment is another way of approach that clients are now consciously building as a strategy. And within the systematic investment, I think if you were to look at, say, for HNIs, AIFs and PMS, has found favor because just the way you have 8,000 crores of SIP money coming in across both retail and HNI, even in AIFs, you're seeing uptick now because people are wanting to now commit, but they want the money to be deployed over a period of time. And if you know the AIF structures, typically you commit a part of it anywhere between 20 to 30%, and then the money gets staggered over a period of time, getting invested over the next 6 to 12 months. And that is, I think, or even with PMSs, where clients commit, and then it's up to the discretion of the fund manager how he would build up the portfolio. So I think systematic investment is finding favors. So in fact, we always tell our clients that, have a dash of hope, which is D for debt, A for asset allocation, S for systematically investing your portfolio, and H is the entire holistic way of, looking at all asset classes.
Looking at fresh portfolio allocation though, Anupam, and I want you to construct a portfolio for the next, say, 1 year and for the next 5 years as well, both for a conservative as well as slightly risk-happy investor. What kind of portfolio would you construct?
So, Aisha, in case if it is a 1 year portfolio, then majority of the allocation has to go into debt, and within debt, it will be majority of it has to get into good quality AAA papers, and you may want to go up to duration. You cannot play duration, with a 1 year portfolio. So you will have to look at a short-term maturity papers, which is on the debt side. The moment you increase your allocation to slightly longish, you spoke about 5 years. I think 5 years gives you a lot of leeway to construct your portfolio in a meaningful manner. And I think it is here that equity money can get invested. You started with, PSU names, but I'm saying on an overall, even across market cap, we see there are some great quality companies which, have got battered, and you could enter at good valuation at this point of time. So you could really play themes here. So if I were to construct a portfolio, almost 40% allocation would get into 40-50% allocation would get into debt, and the balance 60% within that one can invest in a staggered manner an equity portfolio. Within the equity portfolio, you can have a core allocation in large caps through mutual funds, and you could complement or supplement that portfolio with one thematic portfolios through AIFs and PMSs. You could have a flavor of, as you mentioned, gold. Today you have multi-asset portfolios as well, wherein you do not have to commit. You could invest between and the fund manager. So you give the money to the fund manager, and the fund manager moves money from equity, debt, and gold. And you must also have an exposure to outside of India allocation, and which is the trend that we are seeing at this point of time. So a combination thereof, if you build a portfolio, I think one can build a risk-adjusted, robust portfolio. Our engagement with HNIs have always been that you've made your money through concentration strategy, either through ESOPs or through promoter holding. But once you've built that, I think diversification needs to play a key role because as a wealth manager, wealth preservation becomes a key aspect of our engagement, and to bring in discipline and to move the sentiment away from or the bias of sentiment away, because when the markets do well, Aisha, you're aware that so much more euphoria and all data points seem to say that there has to be an over allocation, and which is where I think people go wrong. And likewise, in times like this, all news channels, every bite that you see, you only seem to hear a lot of pessimism. So I think we will have to look at data points and say that how can I build a portfolio for the long term and build it in a disciplined manner. So that's largely been our overall allocation story, Aisha. So a combination of debt, good quality equity, some bit of undervalued stocks, again with quality being the core theme for us, and diversification into some other asset classes and some other geographies as well.
Okay, Anupam, always great having you on the show. Thank you so much for taking the time out and speaking with us today.